How do you find the will to fight back against a world that wants to keep you sedated, average, and stuck in place? Join us for the tools and strategies you need to create a life of abundance, discipline, and high achievement. This is the Tactical Empire with Jeff Smith.
Welcome to another episode of the Tactical Empire. I am joined by Sean Ryder. What's going on, my man?
I'm ready to roll. I mean, I fly out tomorrow for Jacksonville, Florida for our Inner Circle meetup. I'm assuming you're driving.
I am driving, making the short little jaunt north.
You're in Orlando area. How far is Jacksonville from Orlando?
2.5 hours.
Oh, that's not bad. That's a podcast or two. Half an audio book.
Exactly. Too easy.
Yes.
Too easy.
Awesome, man.
So,
you have a good week so far?
I'm super excited about the meetup. I mean, it's been a little bit of last minute headaches with it, but it's definitely I'm excited. I'm excited to get rolling with it and put on a good show for the guys. Make some plans, structure some things for them, and get them moving. Expand their brains, get them around some good people.
I think it was good that we did like a 90-day planning call in the group last week, and obviously that's going to help the guys that may not be at the meetup. But for me, I kind of have to go over my thoughts in quarterly planning more than one time. So jotting down what we did on that exercise last week was a good head start. And then I feel like I'll come into more clarity once I disconnect from the day-to-day here at the house and get on the plane. Like I said on one of the previous episodes, it starts on the drive to the airport. So that'll be tomorrow. 24 hours from now, I'll be at the airport. I'll be boarding my plane in an hour from then tomorrow. So ready to rock, man. It's going to be good to see you. Good to see the other guys. So other than that, it's been good.
Yeah, I'm super excited. If you're missing this one and you're listening to this, you should be in the group by October, just so you know another one's coming. Yeah.
Well, that's if people don't go berserk over what's happening in the equities market. So we're going to talk a little bit today about the recent drop. I mean, from this recording, the last 48, 72 hours has been about a 7.5%, 8% drop in the stock market. We're talking early April 2025 if you're listening to this later. I did look at the markets before we got on here, and they're up about 2.5%. And so, why should people, regardless if they're in the market or not in the market, I think it's easier for people that aren't in the market, why should they not really care about a 48, 72 hour, 8% drop in the market?
Oh man, I could go in a lot of different directions with this one. You just have to, you have to be unemotional about it. It's not really that big of a deal. It dropped 10% at one point, I believe, overall, and then it's spiked back up since Friday or whenever it was being volatile. I think what Trump is doing is a lot deeper than people realize. Long term, I think we're feeling some short term pain, but the reality of it is if you if you pay attention to the actual numbers, like if you had a portfolio in 2020, 5 years ago, it has literally grown by 100% to this point. And if you didn't cash out last week, it is still right there in those same similar numbers. So I think you have to really look at the stock market from a macro standpoint and understand that the gains are. I read a book about this one time that talked about in the last literally 80 years, the majority of losses occurred in like 8 single days. Yeah. So it was literally just like panic selling that caused the dips. and caused the losses. And if you removed like those few days from the market, the gains in the overall market were absolutely astronomical. Like it was like if you had rolled your money in there and then avoided those few days, you were at like 41% gains. And obviously the actual average was a lot lower than that because a lot of people sold. For me, it looked like a great buying opportunity. I mean, crypto's down, stock market's down, a lot of individual stocks are on sale. Tesla's been cut in half. You can't tell me Tesla's not going to come back to some extent. I mean, there's a lot of huge companies involved with that stuff that are kind of on sale right now. So if stocks are your thing, there's money to be made right now for sure. Um, the There's a strategy that's deeper than what I think most people understand what's going on. I personally think that all of what went on last week was kind of just a little back and forth war between the administration and the very, very wealthy people that own 92% of the stock market investments. So there's a very small percentage of people that own like 90% of the stock market. And so they can make moves that shift the entire market for regular people. And so what I think was a little bit of headbutting last week over the tariff situation. And then I think that those that hold a lot of equity in the stock market kind of try to flex their muscle and kind of figure out who was going to call whose bluff. Yeah. What I really think is happening is they're trying to cause, I think the administration is trying to cause volatility in the market so that the Fed will lower interest rates and so that we can lower the overall debt ceiling down and refinance our debt into much lower terms, which will then make everything cheaper for everybody. And so the whole argument is really just theater. So normal people should just hold on and buy stuff.
I think it is just theater, and the stat that you're referencing is like 90% of the equities market is owned by 10% of Americans. So like, what are we doing here? Like most of the people that are freaking out and being emotional, like we're not the ones that own the equities, and that's not to say that like your 401k to you doesn't matter, but it does reinforce what we teach, which is like your net worth is just a number on a paper unless it's paying you, and unless you're if you're not in retirement, your 401k is not paying you. If you are in retirement, that's probably the only people. If you're in retirement and you're taking distributions, you're like the only people that are really affected from any dip in the stock market. But I'm cautious to say that because if this is just like a week or two and then we normalize and even come back over 50% of what that 8% drop was in 2 days, like that's not, for most people, that's not going to make a difference. But if it's a sustained drop, I think that matters only to people in retirement taking distributions. The rest of us, it doesn't matter. It's just a number on a piece of paper. It's not doing anything for you. If your net worth is made up of things that are paying you today, that matters. For the people that have equities that are investing for cash flow, if you're buying dividend paying stocks, it's just a buying opportunity. You probably have your main stocks that you're looking at and they've been a little inflated. So you may not have been able to get into the market as much as you wanted. You may not have been able to hit your numbers the way that you want. So great opportunity, like you said, for the buying opportunity. But for me, like all it is, and again, we still have, we rolled my wife's 401k into a traditional IRA literally 3 weeks ago. And now I'm like, shit, I could have just sat on the cash for a month, but no one knows what the market's going to do. It would have been a really good buying opportunity for us to get into the market yesterday as opposed to 3 weeks ago with that rollover. But for us, like I personally don't have my own money in the stock market. So for me, it's just a big distraction. And that's the utility to not getting distracted is what I kind of want to reinforce this with today, because with what we talk about with the 7 levels of financial freedom, where it's like, where's your access to liquidity? Where is your money protected, which we say high early cash value life insurance, which literally cannot go down in value. So even though the stock market drops, our money keeps growing at an annualized rate consistently every year, forever, uninterrupted, compounding over time. And then we're buying cash flowing assets. So for me, it's just a distraction. And I think people compare, return on investment, which is obviously important. But if your investment causes stress and it causes you to worry, and that is out of your control to fix, right? Real estate can be stressful, but you proactively do things when things occur. There's absolutely nothing you can do with your 401k or stocks when the market drops. And by nothing, I mean don't sell. The only thing you can do is
Yeah.
buy, but you have to have liquidity to buy. So, like, if all your money is stuck in equities and it's something that you don't plan on touching, then this is irrelevant. It's just a distraction. So I just don't even like bringing it up, but I wanted to bring it up today because there may be people that are either stressed themselves or watching people in their sphere that are stressed, and it's just a reinforcement. What I do like is, because of the proliferation of social media, there are a lot more people, at least in my network. Maybe it's just my network because of who I follow. Like, when these things happen, they immediately start posting like, "Don't sell your shit. Like, just chill out. Let the people do their thing." And this is a bunch of, like you said, it's theater. It's people pulling strings. You don't own the majority of the stock market. Like, just let them do their thing. You're holding on for the long run. So just give that bit of reassurance to the people is really kind of like all I wanted to say about it today.
Yeah. I mean, it, I received some text messages last week, like, dumb this down for me in a third grade manner. Tell me what's happening. And I was like, I wrote some long post, but I was like, or a long text in response to these guys, but it was essentially everything I just said. I was like, this is going to pass pretty quickly. The thing that I think is interesting is, like, when I see things like this, I see opportunity to buy things. And so, like, what's available while everybody else is panicking. But the thing that I don't see is, like, this, and knock on wood, we can return to this date in 12 months. I don't foresee at this point, like, a month ago, I didn't know what the fuck they were doing economically. Now I can kind of see the game that's being played. And I don't think we're going to go through a sustained dip. And I could be wrong, but I think this period of pain is going to be shorter than most people think it is, meaning the opportunity window is going to be narrower than we're used to.
Mm.
Usually you go into a recession and it takes a few years to shake off the cobwebs and get everything rolling. And I, the economic moves that I'm seeing made in the last 3 weeks, 4 weeks, to me, project a steep ascent that's not far away. I'm thinking like 6 months, and I'm like, holy shit, like, that's not a very long time to, like, take advantage of opportunities, right?
Yeah.
In 2008, we had 5 fucking years to still snatch up properties and do all the real estate deals and everything else. I mean, you really had 3 years, but there was a ton of wealth transferred in that period of time. From 2008 to 2011, like, absolutely made people. Like, they went from zero to done in those 3 year period. And that's what I'm looking for in what we're seeing now. Like, do we have that trajectory? And we might. And like I said, I mean, even if it's rolling in 6 months, we probably have 18, 24 months to, like, continue to make moves
Mhm.
that will be substantial and good deals going forward, whether it's buying businesses, investing in any of these assets, especially if they lessen the burden of lending and kind of take some of the reins off um, the commercial market, especially. So we'll see, but
Yeah.
that's what I'm seeing on things.
I would like the commercial markets to lighten the load. I have a commercial building listed, and it's hard to sell when the rates exceed cap rates on all these buildings that are on the market locally. I think it's interesting. I think there's an argument to be made that we obviously have an administration that is being vocal and more proactive than most people are used to, which means most people are comfortable with. But there's an argument to be made that like to do all these moves this early in administration, you got to look at the voting cycle, and we have midterms in less than 2 years. And so, if what you said turns out to hold true, and I hope it does, that it's a short opportunity before you see a steep incline again, that would
Hmm.
bode well for the people who are making the moves right now, because people will forget how shitty a bad first 3 months are to their portfolio if you start turning things around and their 401ks are real nice in the next 18 months when we got to go back to the ballot box and things like that. So I think a lot of this is over my head. I don't dive into it too deeper. I just try and stay in my lane. But it is, I do like to see the proactivity of things moving. And I don't think that it's going to be, regardless if it's 3 months or a year, like if you implemented what we've been saying on this podcast for over 2 years, you should have dry powder to take advantage of times like this. You should have capital reserves. You should have money protected, and you should have cash flow coming towards you, whether that's through active sources by creating personal development for yourself and getting better at your job, or the assets that you should be buying. And so it's moments like these that will hopefully help people reconsider what they've been doing with their money and investments, and if they've been hee-hawing around and not doing some of the things that we recommend, because I don't see too many people freak out in our group. I don't think there's been one post in our inner circle about what's happening over the past 7 days.
Yeah.
Not one post. And it's because the guys are focused on the right thing. I think that is the biggest reinforcement of this podcast, is like, if you're doing the things that you need to do to better yourself and your portfolio, it's irrelevant what the headlines are saying right now and what's happening to a digital number on a computer screen, quite frankly, in my opinion.
Yeah. Yeah. And I mean, like I said, I think a lot of people are incentivized to make people panic in these situations. And so, like, if you just hold fast and do what you do, stay narrow, and you'll be just fine. To your point, I think they're doing a tremendous amount of activity because of the midterms, like you said, because they can't take 2 years to implement this stuff and it not put any money back in like Main Street's pockets. I
Right.
think that's their entire intent. They're executing a plan at a breakneck pace so that we can spend a year in the economic environment that they've got planned so that people can feel it. And you're already seeing it. Eggs are down, gas is down, food is settling back down. There was an inflation report yesterday, I believe it's at 1.2%. It's the lowest it's been in 5 years. And so like the levers that they're pulling, in spite of what you're seeing on the news, are the right levers long term. And and anyone that says otherwise doesn't really know shit about finances. And like that's just the bottom line. I mean, these vaccine experts are now stock market experts and tariff experts. And so just I would plug your ears and move on down the road. Love your family, save some money, get wealthy, get fit, have fun, smile a lot. That's all you need to focus on.
It's just interesting where like they want to hurt the rich so bad, and what's happening is hurting the rich. 90% of the equities is owned by 10% of the people. Like, you are hurting the people who own the stock market, and so to say that in particular the president only does things to support the rich, and what he's doing right now is making a lot of rich people not happy. So I just step back, stay in my lane, focus on what I'm building. But I'm sticking to the plan that we've implemented for the past 5-6 years that you taught me 5-6 years ago, and it is always reinforced in times like this. But hey, if you're in the stock market and you still followed our plan, you would have access to a lot of liquidity and a lot of money to borrow from and dump it in there and have a really good buying opportunity. So if you don't know what we're talking about, hit us up and we'll send you some resources on the 7 levels of financial freedom. But Jeff, that's all I had to say about it. If that's all you got to say, feel free, send the people out.
Oh yeah, guys, join us in the Facebook community, the Tactical Empire. It's a free Facebook group. The Tactical Empire is on every platform. You can follow that page, and Sean and I are on Instagram and Facebook. You can DM us over there. Sean's on TikTok. He does dances frequently over there. So, but I don't know what his handle is over there, but so we'll have to get that to you.
I am not on TikTok.
I kid. Just trying to draw in some more eyeballs, man. They wanted to see you dancing. All right. Guys, have a great week. Kick ass. We will see you next week.